You can see by exact atomic time it's 10:37, 30 seconds on Sunday, the 10th of February. And this is a short video about what I call fractal market analysis. And it's a way of looking at complexity. Well, first of all, let me give you some links. Okay, the crib sheet we're going to talk about is here. Here's the URL QR code for it. If you pause it, you can get your smartphone on it, or it's tiny.cc/cribsheet. The Royal Society lecture I'm looking at is tiny.cc/complexity. And if you like quantum mechanics and number theory and their connection, it's RSQM for Royal Society Quantum Mechanics. That was just I was bored tonight watching number theory videos, only because I saw another video with some links between the zeta function and complex dynamic systems. So here is my crib sheet, and let's talk about complexity. In complex dynamic systems in nature, such as the body, there are bottom-up and top-down influences. You know, top-down is society, down to behavior and neurobiology, etc. And bottom up is literally quantum events in proteins, then enzymatic reactions and protein folding and cellular pathways, and maybe more complex cellular pathways like DNA replication, which requires hundreds of pathways, and then cellular function and the cell, and then you get the idea. But in markets, financial markets, there is no real bottom-up influences. Well, there is, but not in terms of technical analysis. So when I talk about a fractal market analysis approach, I mean that with the print of each candle from the superior time frame and downwards, you need to look at that chart. So the first of each month, you look at your monthly chart, you put on all the key levels and trend lines. They're not going to change much because those levels won't be hit for a good while. But each month, on the first of the month when the previous candle prints, you look at the chart. I think the weekly charts print on, I guess, Sunday nights or Monday mornings, but it doesn't matter. You look at the weekly charts every Monday morning when the previous weekly candle has printed. And I got to find out when that candle prints. I don't actually look at weekly charts that closely. Every morning, you look at your daily charts, and then maybe at noon you can glance at your daily chart again in case there's a divergence forming, because the RSI value is going to be changing throughout the day. And now for the intraday charts, hourly charts, you're not going to remember to look at your hourly charts. So what you got to do is get an app on your iPhone, set an alarm for N or X01, 1 minute past every hour. And when your alarm goes off, just scan your hourly charts. And then obviously intraday, you're looking at your 5-minute charts constantly, and you're comparing the correlations between whatever market you're looking at, be it if you're looking at risk assets like euro, dollar, S&P, and oil, then you're comparing where each market is in terms of its momentum change and where it is inside of its range and what the trend is. Are the correlations working? Now, I got this idea that when the market hits a structural point, you go through a thought process for my strategy, but it doesn't matter. It's for any strategy that's a quantitative strategy. So if you're, whatever signal you're using, whether it's stochastics overbought, oversold, or momentum oscillator crosses like in MACD or CCI, or stochastic crosses, as the market is ticking up, you say it's touched a level. What level is it? For my strategy, it's what's the delta RSI between the first peak and the second peak? What's the PD value, which is just the delta RSI divided by the delta time? Is the entry in the direction of the overall trend? I said yes here. Is it the first RSI divergence signal? Are there false signals? So if it's the first signal, it has more merit. And then from the 5-minute chart, we got to look at the inferior and the superior time frame. So we go to the 1-minute chart. Is there more divergence? The divergence should start after the superior signal, because if it's a high momentum price reversal, there's a time dilation. Then we got to check the 1-hour chart. Is there more divergence there, which would suggest that there's going to be a price reversal? In the hourly chart also, is there reverse divergence? Now, we don't need PD values of reverse signals because they have a higher delta time. We just want to know what the delta RSI is. And signals greater than 5%, I think, have a better edge. And then, what does a daily chart say? Are there divergences? Are we on a trend line? And overall, do we miss any trend lines if we're on a level? So intraday, when you get, two peaks that are forming, if you haven't connected the past peak at the second point, you could miss that we're at the third peak of a downtrend line resistance, for example. And then it is, what's the risk? Where in the range are we compared to the bottom? You wait for the candle to complete of the RSI signal. That's what I call the N+1 candle, and then your entry is inside that candle with your stop one tick outside the range. And then you want to consider things, do the same thing in your correlated market. So if you're looking at oil, then check Eurodollar and S&P for divergences or support on technical levels. And then I also use market delta divergences. It's a reversal indicator, an order flow divergence. Like for example, if you have a bullish candle that closes on a high, then in delta, which is the disparity between the aggressive buying and selling, you could have a negative delta, which means there's more market sell orders above and beyond the limit order book. Or you could have a day low, which is going to be, for example, like a bullish candle, and you could have like a negative delta. So at a day low, if you got a bullish candle, obviously the close right here was higher than the open, but you could have had more market sell orders. However, the limit order book lifted the offer, so it's a reversal indicator. So, and then you got to look at, and I got some just quantitative stuff, what trade is it, what's your percent win, what's your equity curve, the outcome. So that's how I think. So and I time myself. So seeing I got let's look at my time. This runs 3.5 minutes, and I've already done this for cable. This is the 5-minute chart. This is February 6th. Look, we have a triple bottom in the 1-minute chart. We have a bullish divergence, and I can tell you what the bullish divergence is. You can see it's a beautiful reversal pattern. RSI goes from 25 up to 39, so it's 14%, but the delta time is high, so it's less than 1. There's like 16 candles there, so it's like, 0.8. And then what level is this? Well, that's the key support level. That's why I have it on my chart. So now we go to the hourly chart, and this glass candle here is 9 o'clock. So the hourly chart at 8:59 would have printed, so at 9:01, 1 second. So here's the hourly chart, cable, same place, February 6th. Let's see, the 8 o'clock candle, so it finishes at 9:0001 second. RSI divergence is from 15.4 up to 24, so we're up 9%. But there's more than 9 candles, so the PD is less than 1, so the edge isn't as strong. Here's the daily chart. This is the candle for, lo and behold, February 6th. And we have a bullish divergence. So we have 14 up to 34, so 10%. And the PD value is high, like 1, 2, 3, 4, 5, 6, 7, 8. So 10 divided by 8, it's like 1.2 PD. And then this level here, so remember I said what level are we on? Well, it's not a great level. That is the support level back here on the 2nd of August. And then here it is. So we have a fractal divergence. We have a classic bullish divergence in the daily chart. The hourly chart has a double bottom with a strong delta RSI, but the PD value is low because the delta time of the signal is wide. And then right here, if we drill down, this is my fractal market. Look, so we're going from top down, daily, hourly, 5-minute, and we're looking right here. We're drilling down like a fractal right into that wick right there. And that candle is a doji. It's a reversal candle. And look at the price pattern that's happening. Double bottom divergence, a strong reversal pattern on a support level near the third test of a daily uptrend line support. So it's my fractal divergence cluster setup. It's very intuitive. And, look, 1, 2, third test of a daily trend line. That's that trend line right there. And then, we're going to look right here. There's 2 hours right there. So this is roughly, there's 12 5-minute candles in 1 hour. So we're looking basically from, 7 till 9. And then there's a strong divergence. And then I'll show you what happened. We bounce. So we're up. That's the 5-minute chart. And then the hourly chart right here, if I scroll ahead, we're up from, spot 5635 all the way up to spot 583. So we're 200 ticks right there. And you can see how that, and the 1-minute chart, which I got here, here's the 1-minute chart, and there was no signal there. So this is the 1-minute chart. There's 5 times more candles than the 5-minute chart. I'd expect a little divergence between here and here, but there was no signal, so it wasn't a really high fractal divergence. It was just a fractal divergence. So unless you're looking at the market very methodically with this crib sheet and that kind of mindset, you're not going to be able to see fractal divergence cluster setups, and they're beautiful. They're very high probability. So watch the Royal Society lecture. It's really entertaining. It's not necessary for trading, but it just deals with complexity, and that's just my thoughts on the market tonight. So I'm going to use my crib sheet. So I'm going to get it laminated. I'm going to write on it with a dry white marker, but I might have to change it so I got bigger spaces to write in. But got to really drill down from the higher to the lower and look at all time frames all at the same time and where these signals line up all at the n+1. You know, to summarize, here's the fractal. Daily chart, hourly chart, 5-minute chart. All these charts lined up a divergence that ended at the n+1 in the same place, which was exactly, you know, on February 6th at 8:59. That was the reversal point. And then we're on side 200 ticks. So you could have risked, you know, like 20 ticks with high leverage. So whatever your risk profile is, because you got a fractal divergence cluster setup, you can go in for a tight stop and you can have a little bit higher leverage with, you know, the idea of a reward to risk ratio that's big on high leverage with the same like stop out, which is your, you know, your 1.5% drawdown if you get stopped out, or your 1% or whatever you use. It's beautiful. So that's just my ideas on the fractal nature of financial markets on this Sunday night. I'm just doing some research. Yep.